I need you to pay very close attention because what I am about to explain to you in the next few minutes could directly impact your financial outlook, your monthly earnings, and the stability of your retirement. This is not something you want to skip. This is not something you can afford to move past. Right now, as you are watching this, millions of American retirees are completely unaware of the important updates that have just been revealed for Social Security disbursements. And I am talking about updates that could mean hundreds of additional dollars arriving in your bank account, or alternatively, updates that could cause you to forfeit benefits you have already accumulated if you do not understand what to do next. You have contributed into Social Security for decades. You have worked, budgeted, and prepared. And now, as you enter into or continue your retirement period, the last thing you deserve is to be kept uninformed about the funds that are rightfully yours. And yet, every single day, retirees across this nation miss out on thousands of dollars simply because nobody informed them what they were eligible for, what shifted, and what they needed to do about it. That ends today. The Social Security Administration does not mail you a notice every time something updates. They do not appear at your door. They do not ring you on the phone to guide you through the revisions. It is your obligation and yours alone to stay educated. And that is precisely why this information right here, right now, is so incredibly essential. Because April 7th represents a date that every Social Security beneficiary and every person nearing retirement needs to have marked in their calendar. There are updates occurring that are already impacting payment timelines, benefit totals, eligibility requirements, and much more. And if you do not understand about them, you cannot respond to them. So, take a moment, settle in, because I am about to guide you through everything you need to understand step by step in clear and straightforward language that anyone can follow. No bewildering government terminology, no complex legal phrases, just the facts delivered to you with sincerity and concern, because you deserve nothing less. Let us begin at the very foundation with the most urgent question on every retiree's mind right now. When is the next Social Security deposit? And how much will it be? April 7th lands on a Monday, and for millions of Social Security beneficiaries, this is a deposit day. The Social Security Administration follows a structured deposit schedule that is determined by your birthday. If your birthday falls on the 1st through the 10th of any month, you receive your deposit on the second Wednesday of each month. If your birthday falls between the 11th and the 20th, your deposit arrives on the third Wednesday. And if your birthday falls between the 21st and the 31st, you receive your deposit on the fourth Wednesday of each month. For Supplemental Security Income beneficiaries, also known as SSI, deposits traditionally arrive on the first of each month. But when the first lands on a weekend or holiday, that deposit is shifted to the business day immediately preceding it. This is something a lot of retirees overlook, and it creates unnecessary worry when deposits appear to show up early. It is not an error. It is the process functioning exactly as it should, and this is where things become very noteworthy and very significant. Following the cost of living modification that went into effect at the start of this year, Social Security benefits experienced a notable increase. The Social Security Administration declared a cost of living modification, commonly referred to as the COLA, of 2.5% for 2025. Now I understand what some of you are pondering. 2.5% does not seem like a lot, eh? But let me convert that into real figures for you, because when you observe the actual amounts, it reveals a very different picture. For the average retired individual, the monthly Social Security benefit has climbed to approximately $1,976 per month. That is nearly $2,000 every single month just from Social Security alone. For couples where both partners receive benefits, the combined average is now well above $3,000 per month. For disabled individuals receiving Social Security disability insurance, the average benefit has grown to approximately $1,537 per month. And for survivors, those widows, widowers, and dependents who rely on Social Security because they lost a working partner or parent, the average benefit has also experienced a meaningful increase, providing additional financial support to some of the most vulnerable members of our community. These are averages. Your actual benefit could be considerably higher, or it could be lower, depending on several very particular factors. And this is where paying close attention right now could represent real money in your wallet. Your Social Security benefit is determined based on your lifetime earnings. The Social Security Administration reviews your 35 highest earning years, adjusts those earnings for inflation, and uses that formula to determine your primary insurance amount, which is the base benefit you receive if you claim at your full retirement age. If you worked for fewer than 35 years, zeros are factored into your formula, which reduces your benefit. If you had high earning years, those contribute in your favor in a very meaningful way. If you have not yet claimed Social Security, or if you claimed early, there are possibilities available to you right now that most people never discover. If you claimed Social Security before your full retirement age, you permanently decreased your benefit. But did you know that in some situations, you can actually retract your application and reimburse the benefits you collected, effectively restarting the process? This possibility is only available within the first 12 months of claiming, but it is an approach that a small number of people are in a situation to utilize, and the financial advantage can be substantial. Even more valuable for those of you who are between ages 62 and 70 and have not yet claimed. Every single month that you delay beyond your full retirement age, your benefit grows by approximately 0.23%. That accumulates to 8% per year. Let me repeat that again. By delaying, your guaranteed benefit from Social Security grows by 8% per year. There is almost no investment in the world that provides you a guaranteed 8% annual gain with zero risk. This is one of the most effective financial approaches available to retirees today, and the vast majority of people never leverage it simply because they do not realize it exists. Now, I understand some of you are wondering, what if I require the money now? What if I cannot manage to wait? And that is a completely reasonable concern. Life is costly. Healthcare expenses are climbing. Groceries cost more than they ever have. Utilities, rent, prescriptions, all of it accumulates. And for many retirees, Social Security is not just a supplement, it is the primary source of revenue. So the decision of when to claim is not just a numerical question. It is a deeply individual one. But the key is that you make that decision with complete information, not with assumptions, and not because nobody informed you there was another possibility. Let me transition now to the updates and earnings limits because this one impacts a very large number of people, especially those of you who are still employed while receiving Social Security benefits. Many retirees today cannot manage to fully retire. Some of you are working part-time, taking on seasonal work, or operating small businesses while also receiving Social Security. And if that describes you, you need to pay very close attention to what I am about to share. If you are below your full retirement age and you are receiving Social Security while still employed, there is an earnings threshold for 2025. That threshold is $22,320 per year. If you earn more than that figure, Social Security will deduct $1 in benefits for every $2 you earn above the threshold. That can come as a very unwelcome surprise if you are not anticipating it. However, there is very significant detail here that most people do not realize. The money that is deducted is not gone forever. Once you reach full retirement age, the Social Security Administration recalculates your benefit to provide you credit for the months in which benefits were deducted. So in the long run, it does not permanently decrease your benefit, but it does impact your cash flow in the short term, and that is something you need to prepare for. Now, in the year that you reach full retirement age, a much higher earnings threshold applies for 2025. That threshold is $59,920. And once you have reached your full retirement age, there is no earnings threshold at all. You can earn as much as you choose from work without any decrease in your Social Security benefits. For those of you who are just a year or two away from full retirement age, this is essential information. It could impact your decision about whether to claim now or delay just a little longer. There is also a significant update that needs to be covered when it comes to Medicare premiums and their connection to your Social Security check. Here's something that surprises a lot of retirees unexpectedly. If you're enrolled in Medicare Part B, which covers physician visits and outpatient services, your Medicare premiums are typically subtracted directly from your Social Security check. And if those premiums rise, your net Social Security deposit goes down, even if your gross benefit went up with the COLA modification. For 2025, the standard Medicare Part B premium is $245 per month. That is a jump from last year. So while your gross Social Security benefit went up with the COLA modification, your net deposit may be a smaller increase than you anticipated once Medicare premiums are subtracted. If you have a higher income, you may be contributing even more than the standard Part B premium. This is because of something called the Income-Related Monthly Adjustment Amount, known as IMA. This is a supplemental charge added to your Medicare premiums based on your income from 2 years prior. Yes, 2 years prior. So your 2025 Medicare premiums are based on your 2023 tax return income. If your income was above $85,000 for an individual or $170,000 for a married couple filing jointly in 2023, you are contributing more than the standard premium. Some people do not realize this until their Social Security check is smaller than anticipated, and by then, they are already behind on their financial planning. If your income has decreased significantly since 2023, perhaps because you retired, closed a business, or had other one-time income situations, you can actually contest your IRMA supplemental charge and have it lowered based on your current income. This is done through a form called the SSA 44. And if you are in this circumstance, submitting this form could save you hundreds of dollars per month. That is not a minor amount. That is real, substantial money that you have every right to reclaim. Now, let me discuss something that is impacting tens of millions of Americans right now, and that is the progress regarding the Social Security Fairness Act. This is one of the most notable pieces of Social Security legislation in decades. And if you worked in certain government positions as a teacher, a firefighter, a police officer, a federal worker, or in any public sector role, this development could mean a life-changing amount of additional money for you. For years, 2 provisions of the Social Security law have decreased or completely removed Social Security benefits for certain public employees. The windfall elimination provision known as WP and the government pension offset known as GO impacted millions of workers who also received pensions from positions not covered by Social Security. Many teachers and government employees have had their Social Security benefits reduced by hundreds of dollars per month, or in the case of spouses and survivors, removed entirely simply because they also received a government pension. This has been a source of deep frustration and genuine financial difficulty for millions of people for decades. The Social Security Fairness Act, which was enacted into law and is now being carried out, removes both the WP and the GO. This means that if you are one of the millions of Americans who is impacted by these provisions, you may now be eligible for significantly higher Social Security benefits. And not just moving forward. There may also be retroactive disbursements owed to you for the months in which your benefit was incorrectly decreased. For some individuals, the retroactive disbursement alone could be several thousand. For surviving partners, the increase in ongoing monthly benefits could be transformative, finally providing them the financial security they should have had all along. The Social Security Administration is in the process of locating affected individuals and recalculating benefits automatically. However, this process is requiring time. The SSA is managing a massive volume of cases, and if you believe you are eligible for WP or GO relief and you have not yet observed your benefit adjusted, it is absolutely essential that you reach out to the Social Security Administration directly, either through their website at ssa.gov or by dialing their toll-free number to verify that your case is in the queue and your recalculation is being handled. Do not wait and hope it resolves itself naturally. Be assertive. Stand up for yourself because this is your money and you deserve every cent of it. I also want to take a moment to speak specifically to those of you who are receiving supplemental security income because the developments affecting SSI beneficiaries are just as significant and they do not receive nearly enough coverage. SSI is a needs-based program that delivers financial support to elderly, blind, and disabled individuals with limited income and resources. The maximum federal SSI benefit for an individual in 2025 is $967 per month. For couples where both partners receive SSI, the maximum combined federal benefit is $1,450 per month. These totals also increased with the COLA modification, delivering some additional support to some of the most financially challenged members of our senior community. One thing SSI beneficiaries must be keenly aware of is the income and resource thresholds that determine eligibility for the program. The resource threshold for an individual is $2,000 in countable holdings. For a couple, that threshold is $3,000. These thresholds have not changed in decades, and they produce enormous financial strain on beneficiaries who must carefully monitor their savings to avoid accidentally surpassing the ceiling and forfeiting their benefits. There have been long-standing appeals to raise these thresholds, and while improvements are being considered in Congress, for now, these thresholds remain in effect. If you are an SSI beneficiary, or you are assisting a family member manage SSI eligibility, thoughtful financial management is absolutely necessary. For those of you who are nearing retirement age and have not yet signed up for Social Security, I want to address you now with particular emphasis. There is a concept that many financial planners call a Social Security sweet spot, and discovering your sweet spot requires understanding three figures: your full retirement age, which is either 66 and some months or 67, depending on when you were born; your break-even age, which is the age at which your cumulative lifetime benefit from claiming later exceeds the cumulative benefit you would have collected by claiming earlier; and your health perspective, which, while unpredictable, plays an enormous role in this evaluation. For most people in good health with average life expectancy, delaying to claim at least until full retirement age, and preferably until age 70, results in significantly higher lifetime benefits. But for individuals with serious health challenges or reduced life expectancy, claiming earlier may actually result in higher total lifetime benefits. This is a deeply individual evaluation, and it is one that warrants careful consideration, ideally with the guidance of a financial planner who specializes in retirement strategies. What I can share with absolute confidence is that making this decision without all the details is one of the most expensive mistakes a person can make. Now, let me also discuss a topic that surfaces constantly in discussions about Social Security, and that is the matter of Social Security's long-term financial viability. Every few years, headlines surface claiming that Social Security is going bankrupt or that benefits are going to be reduced dramatically. And every time those headlines surface, they generate real fear and concern for millions of retirees who depend on these benefits. So, let me provide you the straightforward picture. The Social Security trustees publish an annual report that forecasts the program's financial condition. According to the most recent forecasts, the Social Security trust funds are expected to be able to distribute full benefits for a limited number of additional years without any modifications. After that point, if no legislative measures are implemented, benefits could be decreased to the level sustained by incoming payroll contributions alone, which would mean a decrease, not an elimination. This is a serious matter that requires action from Congress, and there is ongoing discussion about how to resolve it, whether through revenue enhancements, benefit modifications, or a combination of strategies. What is absolutely essential for you to comprehend is that Social Security is not disappearing. It is a program that has operated for nearly 90 years, and it has bipartisan political backing. No elected representative who wants to maintain their position is going to stand in front of retirees and tell them their benefits are being removed. Will there be modifications? Possibly, but the program will continue. And in the interim, your responsibility is to maximize the benefits accessible to you right now with the knowledge accessible to you right now. Let me also discuss spousal benefits because this is an area where I observe so much misunderstanding and so many overlooked opportunities. If you are married or if you were married for at least 10 years before a separation, you may be eligible for Social Security benefits based on your spouse's or former spouse's earnings history rather than your own. The spousal benefit is up to 50% of your spouse's primary insurance amount. If that total is higher than the benefit you would collect based on your own work history, you can claim the spousal benefit instead. And in the case of a former spouse, claiming their history does not impact their benefit or anyone else's in any manner. It is money that is accessible to you, distributed entirely by the Social Security Trust Fund, and claiming it has no adverse effect on anyone. For widows and widowers, the survivor benefit is even more substantial. You may be eligible for up to 100% of your deceased spouse's benefit if you claim at full retirement age or later. If your own retirement benefit is smaller than your survivor benefit, it may make sense to claim your own benefit first at a decreased amount and later transition to the survivor benefit at its full value. This is a coordinated claiming approach that can result in dramatically higher lifetime earnings. And it is an approach that very few people learn about until it is too late to take full advantage of it. I want to stop here for just a moment because I want to express something that comes from the heart. You have worked incredibly hard. Many of you have spent decades in careers that were physically challenging, emotionally exhausting, and financially humble. You have raised families, paid taxes, contributed to your neighborhoods, and you have done it all while putting aside a piece of every paycheck for retirement that you hoped and wished would be secure and dignified. You deserve to collect every dollar that is owed to you. You deserve to retire with confidence and peace of mind. And you deserve to have someone in your corner who will share the truth, describe the system clearly, and help you manage it without feeling overwhelmed or bewildered. That is what this community is here to accomplish. And that brings me to something I want to request you to do right now. If this content has been valuable to you, if you have discovered something today that you did not understand before, if this has provided you clarity, encouragement, or guidance, then please do something that costs you nothing but could represent everything to someone else. Pass this along. Pass it to your spouse, your siblings, your neighbors, your friends from church or from the community center, because there are retirees out there right now who have no clue that they are overlooking benefits they are eligible for. There are widows sitting at their kitchen tables questioning how they are going to survive to the end of the month who could be collecting significantly more money from Social Security if only someone showed them how. Your sharing could transform someone's life.